talking about the real estate market in the DFW area, which is Dallas Fort Worth area. So I'm excited. I am Kira Ford, your real estate cheerleader, aka your favorite Dallas realtor, and we got quite a bit of things to talk about. I know I've been falling off a little bit when it comes to doing my lives and keeping you updated, but guess what? This is a new day. And then also, what's exciting is that we have the last 6 months of this year to make it the best that we can. So, what that means for you is if you didn't do it right the first 6 months, you can get it right this next 6 months. Really, really dig deep and let's go after the goals that we have set out for ourselves. So, I wanted to encourage you guys, just like I've been encouraging myself. Plus, I love a good, fresh start. It feels like it's the beginning of the year, but it's like beginning of the second half. All right. Halftime. Games are won in the second half, not in the first half. Okay. All right. So let's jump into it. So the first thing let's talk about that we want to talk about today is inflation. It's been up between 1.7% to 2.1%, which is a little higher than the feds would like it to be. They usually like it to be around 2%, but that's still not too far off of target. So this means that the the Federal Reserves may soon start to loosen up those rates, those rate hikes, because it makes it where lending will be a little bit easier to borrow. So we may, okay, don't quote me on this. We may see mortgage rates come down slightly. So what that means for you is don't say I'm getting ready. You need to be ready so you don't have to get ready. All right. Because I'm telling you now, once interest rates move slightly, I believe everyone is going to jump off the fence and it's going to feel like a football game. And we just won the state champion. And everyone's like, oh my gosh, yeah. And they're jumping out of the stands to charge to the field. That's how real estate's going to feel again. Right now, which we'll talk a little bit about the market shortly. And then the next thing I really want to talk about is what is the core CPE. So if you guys are not familiar with that's very financial lingo. It's basically the core personal consumption expenditure. Look that up. I don't know the E to that one. But basically it tells you what's moving fast, what's moving most, and are we on track? And right now we're at about a 2.5%, slightly up than what we would like to be. However, this is another indicator that the feds are going to loosen up interest rates, because everything is kind of aligning right where they say that they want it to be before they start to loosen up Fed rates. Remember, Fed rates are not a full indicator of what mortgage rates are. But usually if Fed rates change, then soon after that, mortgage rates change. So I do want you to be aware of that, because sometimes people think the Fed rates are the exact same thing as interest rates, and they're not. So I want to make sure you're well informed. But the good news is that consumer confidence has improved from April to May. And so people are starting to really feel better about the economy and how things are looking in the near future. And that is key for anyone thinking about entering into the real estate market. If you're confident about the economy and where it's heading, it's easier to make bigger and, more challenging decisions, which is buying and selling, because the economy will directly affect you once you make this big purchase. So I will say it is nice that the consumer confidence has started to go up, which then tells me that is, hey guys, stop listening to the national news, or not the national news, the national media, because they're telling you what the state of the market is nationally. And what I want to do is I want to get a little bit more granular, get a little lower, and get into the local. I serve quite a few counties because I have so many referrals from all over the DFW Metroplex. But I want to make sure that you know what market it is, because every market's hyper local. And yes, we are still in a seller's market, which I'm about to get to. We are still in a seller's market. And when I say slightly in a seller's market, because buyers also have great leverage as well. So, and we'll talk about that shortly. But why we're still in a seller's market is that inventory is still low, guys. I mean, we're seeing more inventory now than we have in the last 5 years, which is great for buyers. Okay. So this is the opportunity. This is the, the market that all these buyers have been saying that they want. They want more options. They want, a little bit more incentives. We have more inventory, but we don't have a surplus of inventory. Okay. So with that being said, is hey, buyers, get out here and leverage what you can before the market changes back to a heavy seller's market where there won't be as many incentives, where there won't be as many things that they're willing to do. So that will be key. That's what I think is key for a lot of buyers. This market is kind of, it's kind of, in my opinion, I think right now the market is definitely for buyers. For people who are selling, I do think that you have a great opportunity, but you have to price your property right in the very beginning, because that's when emotions are very high. When people see the house, they want to be like, yes, this is the house for me, versus watching it, slowly trickle down, because most likely you won't get what you believe you can get. This is not the market that you want to test a price. This is a market that you want to feel like, I'm either at market value or a little below, so I can get a surplus of people looking at it, because the more eyes on it, the more chance I have to get it sold. And at the end of the day, that is the goal, to get it sold. And so it wouldn't be right if I didn't talk about the pricing trends. So increasingly, I will say the home prices are increasing. So they have been increasing about 1% compared to last year, but not every home is selling for asking price. So sellers need to list their home at the right price to attract the right buyers. If your house is priced too high, you could see a reduction in price. And on top of that, your listing price might not make people move quickly. If you want to sell your house quick and for the most amount of money, honestly, I think that this is the market to go a little underneath, and make sure that you're positioning your house where it's a beauty contest and a pricing war. That means that your pictures are professional. You're not having people come in there take pictures of, with their phones. You need to have professional photos. You want to represent your house. Great. It's a pageant. You want people to be like, yes, this is the beauty queen. We want her. And then you also want to make sure it's priced right, which means that, okay, it's really, really pretty, but also like, man, this is a deal. So they think. And then usually everyone thinks it's a deal. And so then multiple people jump on that one house, because there is, in some markets, multiple offer situations. I had one in Irving like that. I had one in, where else was it? Oh, I had one in Mesquite like that. And I had another one in, where was it? I think it was in Frisco. One of those. But there are still multiple offers throughout the DFW Metroplex. So just know that, hey, Jake, hey, come say hey. Jake sees someone outside. And of course, I'm on live, and he's deciding to talk to them. It's so like him. Okay. And what's next? Oh, yeah. Buyer mindset and opportunities. So I want to talk about why buyers who've been, waiting for more opportunity, you're in luck. With 28% more inventory than last April, there is a lot to choose from. This market you've been waiting for, let's go shopping. I can't express that enough to buyers. Matter of fact, today I just showed some houses to one of my buyers, and this was our first time out. We looked at about 5 houses, because on average, it takes you about 7 houses to find the one if you actually know what you want. And we looked at the 5th home. It's the one for them, and it happens to be a new construction. And I mean, major deals, $50,000 off the price, and then all closing costs paid for. So, and there's options. We looked at 4 homes, and well, there was 5 homes, and they all were wanting the buyer to pick them. So buyers, this is the market you've been asking for. So let's go shopping. Let's get into the market. Have a consultation with the realtor that you plan on working with, aka me. But if you don't decide to work with me and you want to work with someone else, make sure you have a consultation to have the right expectations, because having the right expectations in this market is going to set you up for success. If you go out here thinking that you can wheel and deal and do all these things, and that's not realistic in the local market that you're looking in, you might be setting yourself up for, for failure, because you need to know the right expectations to have in this market. Okay, you got leverage, so use it. And also just make sure your agent communicates well and actually knows the market. They're not part-time. You wouldn't have a part-time attorney. You shouldn't have a part-time real estate agent, because this is one of the biggest assets that you'll be typically buying in your lifetime. And you want to make sure that you have someone advocating for you and educating you so you can have a true informed decision, which then brings me to the home sale data. Like, a lot of people want to know what's going on, what's the market like. So looking at home sales, we're seeing about 98.3% are selling at list price ratio, meaning most homes are still selling very close to asking price. However, homes with a price reduction, this is why I say you have to price your home right, they're selling at about 97.1% of the asking price that has been reduced. Okay, so pricing is going to be key when it comes to actually home sale data. Okay, and then I think too, this is something to also just be mindful of. Cash sales are making up 1 out of 4 homes that are being sold, which means investors are out here buying, which gives an indicator to buyers. If investors are out here buying in this in this economy, what should that tell you? It's a good time to buy. It's always the right time to buy the right piece of real estate. Okay. And so I think that, once again, you need to be educated so you can make an informed decision. All right. And then the average days on market are about 28 days. That is a little up compared to last year around this time, which was about 24. So I will say things are sitting a little bit longer. Don't fret. That's just kind of where we are in our market. It's just slowing. It's just a little bit slower. But that's okay. That is okay. Whether you are looking to buy or sell, this is a unique time. This is a unique time with plenty of opportunities. Do not get ready. Make sure you are ready so that you can take advantage of the opportunity that you guys have right in front of you. So if you are feeling confident and you want to make a move, or you have questions, let me know. Keep me in the loop. I would love to set up a one-on-one strategy session so I can help you from where you are to where you want to be. Make sure you save this for later, or just follow me for any real estate or lifestyle tips, because I don't want you to just, pick a house and love your house, but then hate the area you live. I want you to love your home and also love the lifestyle around your house, because that's what it's all about. So I love you, friends. Until next time, I'll see you next Monday. YouTube, LinkedIn, all the things. I'll see you then. Peace.